killing frost here in Wichita, and all the flea and tick mothers are upset. They've lost their whole families, but I think they prepared for the next generation before this frost hit. So, going to knock the rest of our leaves loose, no longer dependent upon the wind. Gravity will now take over. So, first frost of the fall. Not much really to say about today's trading. I mean, it is a Newsday trade. And a lot of institutions will take positions, minor positions. Keeps their economists and traders' pencils sharp. They do take positions before the news based on their assessment of the fundamentals and where they think those numbers are going to be. And it is the only way you can secure a trade location on a day like this. Right before the news, you can trade it up to about 30 seconds before the news hits. Sometimes in that last minute, there's a big game where a large order will come in and wipe out all the bids or the offers. And that's used to set up the market or game it by some larger players. So the larger players will take positions before the news based on their assessment of the news. It's not market breaking news or fund breaking news if they're wrong. They do it for a lot of reasons. We can't get the liquidity that we need buy stopping or sell stopping into the market on this type of news. It's just in there. You're going to get skidded. So the best way to play this and lower the risk, because you can't know the news all the time, is to enter the market on that first correction with the news, be it bullish or bearish, and then see if the market will extend the range. And sometimes you have to take these trades within the first 30 seconds, and you usually can execute against the high volume area, which includes the mode and the weighted volume mean and that first bar that's created off the news. Then it's got to extend the initial bar's range directionally with the news, or you're going to work development. So a lot of people choose not to do anything until the market settles into development and they go into a scalping mode. But some in the room have learned that if you can get in on that first correction, sometimes you can have, and like in the note, another half point in the move, and in the bond you could have another full point of move. But it's a different situation. It makes my job really easy. I mean, all I basically say is if you know the news, you got the trade. Now, they're looking for non-farm payroll at 85 to 90 with a loss of government jobs, which is happening all across the United States at the city, county, and state level in addition, not at the federal level. And government jobs are going to not be a growth industry like they have been. In fact, you'll see wages frozen. You'll see no new hiring. You'll see attrition take its toll. And with the baby boomers getting ready to leave the workforce, you can see government populations getting back pretty quickly over 10 years to where they were before the growth of government exploded. So you're looking for 85, 90 non-farm payrolls, 115, maybe 120 on the private non-farm payrolls. They expect unemployment at 9.1. That number is so gamed, people don't pay a lot of attention to it anymore. Then earnings up 0.2%, and the work week at 34.3, up a tenth. So the focus will be non-farm payrolls, and it'll switch to the average work week to see if those numbers are confirmed that way. They don't game the average work week and hourly numbers like they screw around with the seasonals and people dying, people being added to the workforce, and the rest of it. So the market is looking for a favorable number. We're going to hit this number pretty high. The other piece of news out overnight was the G20 has told the EU, just like the G7 did, to get their act together. The BRICS nations have said they would pony up some money through the IMF. China mentioned $100 billion. If the BRICS countries could get more say in IMF policies. So everything comes at a price. And you're opening up the IMF. Only the Anglophile nations are not mercantilists these days, but it opens the IMF up to some of the most coercive and protective economies in the world, and giving them a bigger say comes at a cost. Another article out overnight on Roubini's private talk to hedge fund managers, and I mean, it's based on what we've tracked and followed. It's almost, what was the insignificance of this? But it said the real problem for the EU is not Ireland, Greece, or Portugal. It's Spain and Italy. And the EU is hoping to double the size of its current commitment from 400 plus euros to 800 plus euros. They will be using leverage, and they hope they can buy enough time to get Spain and Italy's act together. Italy is the third largest economy in the EU. It's also the third largest bond market as far as countries go. According to this article, that would seem like a stretch to me. But if they borrowed enough money, they could be there. So again, the problem is Spain and Italy, and most people say it takes close to $3 trillion to clean up this whole problem, and there won't be $3 trillion forthcoming. So what are they hoping for? Buy a little time. Europe's economy might grow, but that would be against every forecast I've seen. Austerity will, over in Spain and Italy, if they get serious about it, will lessen their need for money. But this austerity also cuts into economic growth, which means less tax revenues, which means the borrowing needs will probably stay the same and or increase. So it's a tough problem. All these governments do static budgeting. They say that this is how big the pie is, and if we cut here, nothing changes. Well, if you impose austerity on these two economies, economic growth is going to go down. Less dollars to be spent on consumption. So it's not an easy problem. And I think what you're seeing is that this is the beginning of the dissolution of the EU. Over time, they probably will lose the pigs nations. So we got a Newsday trade. We'll see what happens. We don't have the news out of the EU yet that would help us sustain prices over 131. So if we get over 131 on this contract and we see failure up there or a little deceleration, we can certainly get short. There has definitely been a seller above 130.20. So 130.20 or greater would be a zone we'd look to be a seller, no matter what the news is. And if we get worse than forecast news, that 128.16 to 129.04 would be the support area. And because we won't have a solution out of the EU today, nor G20, my guess is we'll find buyers at some point, no matter what the news is. So let's just kind of play it that way and see what happens, but it is a Newsday trade. Okay, so we run it up to 130.05 on some large player transactions. Again, they lots of games are played as people jockey around and try to spook the market into this number. Be fun to have that kind of money to throw around, wouldn't it? So we've had pretty strong rally here. Here's your RTF, reverse RTF, RTF right here. So you've had three little opportunities to trade. This one produced a pretty big trade. These didn't. Basically outside in. And then in this area right here, the midline holds, and you could take the trade in that area right here, and the market trades higher off of that. So down to the news, and we'll see what happens from there. Now they have run the E-mini down a little bit in front of the news, so people are probably looking at the numbers, saying they might come in a little lower than forecast, and that would be probably if history is any example, recent history, with 400,000 steadily where we are on jobless claims, that would be a reasonable, logical bet. And they got to be right. So our 1255.57 is holding up pretty good. And yesterday, if you'll remember, we said the best structural sell out there was in that 55 to 57 area. Got a little higher in the overnight, but you can see that the market is rejecting prices over 57. So right here, again, where it's down to the news, and right now some people are taking profits before the news. Bird in the hand's worth two in the bush. And this one's going to come off a little bit in front of the news. But again, the liquidity, the lack thereof, means that you just, if you want to be long or short, you got to take that shot before the news and then see what you have. So there's really not too much that you can talk about in here. Based on what happens in the EU and with the euro currency, good news for the EU and the euro currency rallies the E-mini. Bad news brings in selling. Some of our economic news over the last 3 weeks has come in better than forecast. This past week, the news has come in less than forecast. So we had a pretty good September. We had a pretty good August. A pretty good September. Those numbers look pretty good. Some of the October numbers don't. So perhaps the news announcement brought us off right here, but somebody positioned and took it from maybe a couple of hundred short to 2,000 short, and $12.55 down to $12.46.50 took about 9 handles to get off 2,000 contracts, give or take. That shows you how illiquid this market is. So, know the news, you have the trade. We'll go back and we'll see what happens. Not much to say when you get right down to it. Okay, now, on taking newsday trades, sometimes you have to execute in the first 20 or 30 seconds on that first deal to get optimal, but if you let that first 3-minute bar get out of the way, you usually can execute against the high volume area, which would include both the mode and the weighted volume mean, weighted volume average price, and then you got to take out that first bar is high or low to stick with the trade. If that requires a nimbleness you don't yet have, let the move get out of the way. Let the market settle down and work the edges of development. And that probably is the most comfortable way to handle it for most people, especially if you're just getting started in the room. 130.20 or better, Frank. The market's rejected those prices. Anything over 131. I just don't think this market can hold 131 without some big news out of the EU or some serious selling in the E-mini. And once that news has been absorbed out of the EU or the selling out of the E-mini, I mean, you're still looking at a 1.7% interest rate if we can hold above 131, and that's pretty low historically. So I just think the 10-year is going to have a hard time holding over time above 130, but definitely above 131. So definitely a seller above 130.20. I mean, it's kind of like, well, how hard can I really hit the note when it's all said and done if the Fed has said we're holding interest rates where they are probably into 2013? I mean, yeah, we could get down to 125, 126, but probably can't go much lower than that. So, big picture, broad stuff says that it's going to be pretty difficult to stay below 125 on the note, given the current interest rates, and it's going to be pretty hard to stay above 131 without some obvious help from the EU or the E-mini, which means we get hit right between the eyes with a big piece of fundamental news that can't be ignored. You know, Anthony, the market is moving so fast, you can put a limit order out there and give it your best shot. I mean, you're really kind of getting down to the gnats if you think about it. Well, do I put my order against a tick inside the first one, or do I split the difference? I mean, that's really kind of up to you how you want to play it. I mean, you got to figure out how you can live with yourself and execute that order. I mean, if you want to get in, lean against the inside one, the first one you get to. If you want to get cute, get a little bit better trade locations, split them. If you really want to get cute, take the one that's farthest away. I'm not disparaging what you say right there. It's just like things are going to happen so fast, you may not even be able to click your mouse that quickly if it's in the first 20 seconds. I mean, the market is moving.